But as Tyler mentioned, of course, Walmart shares are trading lower despite beating on the top and the bottom line for its second quarter. The retailer also raising its full year earnings forecast, fueled by growth in grocery and online sales. Earlier on Squawk on the Street, I spoke exclusively with the company's CFO, John David Rainey, to talk about the strong quarter.
One of the exciting things about our performance this quarter is the share gains that we had, and it was broadly across all categories. We've seen for 4 or 5 quarters here now that we've been gaining share in food and grocery, but we also expanded that into general merchandise and consumables in the latest quarter. And it really demonstrates that our value proposition is resonating with customers.
Let's get some reaction from Greg Melich. He's retail analyst at Evercore ISI. He has an outperform on Walmart and a $175 price target. Greg, look, when you look at the quarter, there's a lot to like here if you're bullish on the stock, but the stock is lower here in the session, even if just modestly so. Is this a sell on the news because expectations were so high going into this quarter?
I think you nailed it. Look, Target has been losing some share, and Walmart's been gaining some share. And I think people were positioned into this quarter, very much in that direction. So this is a little bit of an unwind up for both stocks, frankly, yesterday and today. I would say for Walmart, what we were really impressed with was that consistent and actually slightly accelerating traffic growth. And as they get those new customers and they come more frequently, that's how they can reinforce them. So to me, that was the real underpinning positive out of the Walmart print today.
And Greg, it just seems to me that to that point, grocery is just really is what's going to make the difference here in many cases to get that guest traffic frequenting the store more and then hoping to move into some of these other categories because discretionary was still soft for them like Target. But unlike Target, they saw it increase, at least from the prior quarter.
I think you hit the nail on the head. If you've got the customers, if you have traffic, it's always better to have a chance to at least keep it. And so, yes, general merchandise might be down for everybody right now, but if you're winning more customers and you're winning on not just value, and I think in your great interview with John David before, he also mentioned convenience. It's not just value anymore that Walmart's winning on, it's convenience. So as they broaden their e-commerce offering, as it gets better, as delivery speeds get better, as they add sellers to the marketplace, they're finding that customers are willing to shop with them in more than just grocery. Now, right now, cyclically, that might not be great. But you're building it for when it comes, whenever that recovery is there, and then that could give them that extra boost in sales and profitability.
Greg, you mentioned earlier that Walmart is attracting some, quote, new customers. Who are those new customers? It's not as though Walmart hasn't been around for a while.
Yeah, it's a great question, and I think what it is that they spent upwards of 5 or 10 years now really doing a lot of the underpinnings to make their omni-channel offering really differentiated. And it's coming together now at a point where, as consumers are searching for value, you've always had that at Walmart. But as they're getting the rest of the e-com system working well, consumers want to go there. They realize that the assortment's great. The delivery times are getting better and better. And the beauty about e-commerce, and we've liked Amazon for a long time, and is that it does unlock you to a different customer base. So Walmart has 90% of Americans shopping there at least once a year, but they have very few supercenters in a lot of more densely populated areas or even suburban areas in California and the Northeast. And as you start to develop e-commerce, you can unlock new markets that are effectively white space.
Very interesting. So in other words, it's that e-commerce customer who is the new customer, maybe in the New York metro area, maybe in New York City, where there aren't so many of the supercenters as compared with maybe Virginia or North Carolina. Those are the new people who are coming in.
There are certainly a big portion of that. I don't want to say it's exclusively that.
Right.
But I think what it's showing you is that, looked at another way, if Walmart's market share in U.S. retail sales is 10% nationwide, those states where they have their best supercenters, their market share might be 15, 16, 17%. And these other parts of the country, their share might only be 4 or 5.
All right.
And so as you get e-commerce growing, I think it was 26% in this quarter, that's almost more than double overall U.S. e-commerce growth. I think that shows you right there how they're getting it.
They're always compared with Target. What's Target need to do to close the gap, let's say?
Well, it was funny. I just look at the numbers. The 4-year comps now for Walmart are up 30 and for Target up 31. So I think what you saw this quarter is what had been a gap of about 1,000 basis points where Target had won so many new customers during COVID. What you saw was this year so far, a lot of that, if you will, going back, if you want to look at that simply. More importantly, I think what they're doing is they're getting the whole omni-channel right, which is you're focused on value, you're focused on assortment. And I think for Target, it's really more of an issue of, frankly, they've had their own merchandising mishaps that they've talked about. And I think that's hurt them. You know, not having the right product in the right stores that your guests want doesn't help your traffic.
Yeah, and obviously the stocks are diverging here as these results are starting to differ pretty markedly, at least this quarter. Greg Melich, thank you very much for joining us.